Good morning, hello and welcome to Money Control's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad. Well, it is the second day of the trading week and yesterday we did see the Monday blues which gripped the market and a broad-based sell-off was present despite no major negative news trigger. But yes, FI outflows that continue to remain persistent and with just 8 to 9 days so far this month itself, FIs have already offloaded about 12,000 crore rupees in our cash markets itself. But coming to today, how the cues are expected to pan out, the GIFT Nifty trends have been pointing out to a subdued start for our own markets. If you look at the pre-open rates, the pre-open rates are also suggesting that, we could see another weakness in today's trading session as well. But yes, we'll be watching out whether Nifty can pull back from the current levels or will it extend losses to yet another day. If you look at the cues from the global markets, that remain fairly weak. US markets ended yesterday's session on a lower note. Even Asia Pacific markets have started the day largely on a negative note. But yes, all the markets, be it your global or even our own markets, all eyes will be on the FOMC outcome, which is due tomorrow. Today the meeting has started and looks like 25 basis point rate cut will be a done deal. But the language around the forecast for next year and the economic projections is what the market participants have been waiting for. Remember that Powell's term ends in May next year and US President Donald Trump has already indicated that he will be appointing a successor to keep the interest rate environment on a softer side. So yes, we'll be watching out how our own markets is expected to react to this particular news. And of course, the overhang on the trade deal front continues to remain with the US for the time being. Yesterday, we did see that the US President Donald Trump has warned fresh tariffs on Indian rice, citing some dumping issues. And this definitely comes ahead of the US delegation visit to India today. They will be on a 2-day visit and, the new round of fresh tariffs on Indian rice is coming on the back of that as well. But yes, it's been a year in some months and since the tariffs were imposed in India and the overhang still continues, which is keeping the sentiment quite weak for the time being. But yes, it'll be a busy day for our own markets, not just the US delegation front, but also we have our Nifty weekly expiry today. And so that is something that we will be watching out for, some volatile swings in the market as well. Individual stock will continue to remain in the focus. Keynes Technology, IndiGo, all of them on the back of the news developments. So yes, we'll be discussing all of this with our experts as well, which is lined up in the show. We'll be also taking your stock related queries. So keep posting them on our live feed and we'll get to them in a bit. Now moving on, let's take a quick check of the top headlines this hour. Wall Street ends the session lower with the Dow losing over 200 points. The US 10-year Treasury yields continues to run higher despite the Fed will cut rate this week. Markets in Asia are relatively lower following the losses in Wall Street. Investors also look ahead to the Fed decision. Meanwhile, the GIFT Nifty is indicating a weak start for our own markets. Crude oil prices fall over 2% after Iraq restores production at an oil field and also due to firmer dollar. Softer fuel prices also put the pressure. Gold prices meanwhile inch lower ahead of the FOMC meeting. The DGCA receives IndiGo's response to the show-cause notice over large-scale disruptions and cancellations. Airline says it's not possible to pinpoint an exact cause yet and seeks more time for a full root cause analysis. The Civil Aviation Minister promises strict action against IndiGo at the Parliament, says that the airline did not flag any issues before the mass cancellation of flights. And US President Donald Trump indicated potential new tariffs on Indian rice, citing dumping concerns and aiming support to the US farmers. This comes ahead of the arrival of US delegation in India for a 2-day visit today. Of course, in yesterday's trading session, we did see that Nifty slipped below that 26,000 level, closed under that 20 DMA levels as well. And today we'll be watching out whether, it's part of the weekly expiry day as well. So some volatile swings could be observed. But yes, yesterday index logged one of its weakest close, which was seen in the last 9 days. And of course, the markets have seen the worst session in the past 2 months itself. But yes, not just the benchmark and the headline index, but yes, the selling pressure was intensified across the broader end of the markets as well. Midcap index recorded its sharpest fall in the past 4 months, and it has dropped more than 1200 points in the past 5 sessions itself. Coming to the small cap index, that has broken below that 200 DMA, and the selling pressure continues from the broader end of the markets as well. Over 90% of the mid-cap and small-cap stocks have closed in the red, and broader markets, as a result of this, has wiped out and erased nearly 7.5 lakh crore rupees of investor wealth as well. But yes, like I was talking about earlier itself, that the US Federal Reserve's policy decision is now the next key market trigger, and we'll be watching out how the language of Chair Jerome Powell shapes out for the next year, and how the economic projections also look out as well. But yes, coming to the cash flows position of where we stand, FIIs, they were the net sellers in the cash markets, sold stocks which was worth about 780 crore rupees. DIIs buying stocks which was worth about 2459 crore rupees in the cash markets itself. Coming to the option queues data, Nifty put call ratio falling to a lower range, that is your 0.64 levels from 1.22 levels in the previous session. And the stock which has been added in the F&O ban, none of the stocks, new stocks have been added, but the stock that continue to be a part of the list, that is your Bandhan Bank, Keynes Technology and Sammaan Capital as of now. But yes, let's take a quick check of the pre-open rates of where we stand as of now. If you look at Sensex, down by about 300 points. Nifty has also slipped below that 25,900 mark in the pre-open rate. So yes, we'll be watching out how the today's session also pans out. But yes, to understand how the trade shapes up for today, let's quickly get on board with the technical expert of the show. Joining me is Hemen Kapadia, Technical Associate of DRChoksey, Finserv. Hemen, good morning. Nifty has slipped below that 26,000 levels yesterday, and we did see a broad-based sell-off in the markets. So what can we watch out next, given that FIs have been selling quite aggressively this month itself?
A very good morning to you, Lovisha. Thank you for having me on the show. It's always a pleasure. Frankly speaking, it's been a 6-8 stock move. Okay, markets are near all-time highs, but stocks haven't done much. And like you pointed out, the mid-cap index came off sharply. Now, thing is, I won't say perplexing, but the surprising thing, Lovisha, is that the VIX volatility index is what? Just above 11. So we have been seeing volatility and the decline on not a very elevated VIX, which is surprising. I mean, normally it's supposed to move contrary. But so, like you said, the FI selling continues, rupee remains weak, and stocks have gone nowhere. So in terms of levels, we've been moving in a range between 25,800 and 26,300. Now that range hasn't changed. We are at the lower band of the range. Yes, if 25,800 breaks, I think that would be a cause for some concern. Yes, today the weekly expiry, so things can get a bit topsy-turvy. Bank Nifty, which has been outstanding, is also now reeling. I wouldn't say under pressure, but it is beginning to come off. So everything seems to be slightly corrective in the shorter term point of view. If you have a longer term view, everything is hunky-dory. But as of now, I think it's better to stay away, at least avoid F&O positions, and wait for the market to find its own feet. And like you said, rice tariffs are being threatened. The US team is coming down to India. Putin came and went. So too many moving parts. Plus, you have the Fed meeting. So I would say stay away. Things are not looking that copacetic, and one would wait for the market to find its own level.
Okay. I mean, what about the Bank Nifty index? That also didn't do well yesterday, and particularly for the PSU banks, they reeled under the pressure. So what's your view, and from a level perspective, anything that you're watching out for?
See, we've had a very nice move as far as the Bank Nifty is concerned. And in fact, just last week, we posted a fresh all-time high. And but now we're posting a lower top, lower bottom on the daily chart. Stocks like HDFC Bank are looking promising, haven't broken out. Kotak gave a bounce back. The PSU stocks don't have that much of an weightage, but State Bank has done well. So all of them look good if you were to take a longer term view. Extreme near term, there is distinct pressure. If you look at Can Bank, Indian Bank, there have been declines, and I believe they could get a little bit more acute. So the outperformance of the Bank Nifty is sort of petering out, fizzling out now, and we could be seeing further downside coming in, at least from a near-term point of view.
Okay, further downside could be possible. What about the IT stocks? I mean, despite some weakness yesterday, this particular sector has seen significant buying interest from the past couple of months. So, any large cap names are you finding attractive at the current levels?
Yes, I think that's turned out to be a knight in shining armor, so to speak. So the setup is better. IT had been under pressure for quite some time. Now it is looking better. See, as of now, we are looking at it as a recovery, not a rally, simply because we've fallen off a cliff, stabilizing and now giving and bouncing back. So coming to specific stocks, TCS had a very deep decline from 4,600 to 2,900. Now it has stabilized. So TCS above 30 to 50 looks interesting. Infosys buyback or no is looking interesting. And many of the IT stocks, whether it's LTTS, LTIM, in fact, I have a buy call on Birla Soft today. So many of them are stabilizing, have posted medium term bottoms, and should be outperforming vis-a-vis the market.
Okay, that's the view coming from IT sector. What about the realty stocks? Yesterday we did see it was one of the top sectoral underperformers as well, and so far this year also, realty pack hasn't done quite well. So anything that you're watching out for, given that we did have the RBI rate cut, but that is also seeming like the stock is already priced in, and right now there's no respite for the realty counters.
Well, if you take a 2 year point of view, Lovisha, I have a feeling that realty should do well, and not only well. If you look at the Nifty Realty Index, we're at what, around 850. 1150 was the recent high over the last couple of years. I believe that should be overcome sometime in 2026. But yes, absolutely right. Extreme near term, lower top, lower bottom scenario is continuing. We are below the 55-day exponential moving average, or we are below the 55-week exponential moving average. They supported 860, which we are breaking. So it's all gloom and doom, at least from the short to medium term. Bigger picture, I stick my neck out and say I am quite relatively positive. But near term, the pressure cannot be ignored, and it doesn't seem to be in a mood to stop, at least as of now.
Okay. Any view on the insurance space, Hemen? I mean, post the GST announcement, majority of the insurance stocks have been quite mixed. Underperforming the markets. Going ahead, how do you feel like it's going to pan out? Because in the month of November, they have seen about 20% of premium growth.
Well, I think, frankly speaking, they are all over the place. Uh, SBI Life Insurance, stood out, posted a new all-time high last month. But if you look at the ICICI twins, Lombard as well as ICICI Pru, they promised much, haven't actually delivered, and don't seem to be in a mood to do anything spectacular. If you look at LIC itself, I mean, lot of promise of a breakout above 920. It's done a flip flop, and we are standing close to supports at 850. So, frankly speaking, except SBI Life Insurance, most of these stocks haven't done anything much and probably don't seem to be in a mood to do so anything great, at least in the near future.
Okay, all right. We'll talk about more stocks in focus, but yes, let's address the first rates that's coming on your screen. Nifty has opened with about 96 points downtick, nearly 0.4% cut coming in on the benchmark index. It has slipped below that 25,900 mark itself. Yesterday, we did see that the index slipped below that 26,100, then 26,000 also got shaved off, and right now we are seeing that Nifty has tumbled below that 25,900 mark itself. 100 points downtick coming in for the Nifty as of now. Sensex also down by about nearly 350 points itself. If you look at India Wix, that continues to lift up, nearly a percent gain coming in for the India Wix itself. Bank Nifty index also starting the trade on a negative note, nearly 0.4% decline coming in for the Bank Nifty index pack as well. 0.5% decline, nearly 200 points decline, which is coming in. Hemen was also mentioning that we could be seeing some consolidation on the way, given that Bank Nifty has performed quite well in the past couple of sessions itself. That's why we can see around 200 points downtick for the Bank Nifty itself. Broad end of the markets continue to reel under the pressure. Midcap down by about 0.3%. Small caps once again again seeing a decline of about 0.3% as of now. Sectorally, it looks like, all of them have been reeling under pressure as of now. All the sectoral indices have opened in the negative territory, particularly for Nifty Realty Index, like we were talking about yesterday, once again seeing a decline of about 0.4%. Nifty Metal Index also seeing flat to a negative bias. Nifty IT Index seeing a decline of about 0.4%. Nifty Auto Index also seeing a decline of about 0.4%. All in all, it's a negative setup for the markets, given that it's also the weekly expiry for the Nifty. So it looks like, it's going to be another subdued day for the markets itself. But yes, coming to the top Nifty gainers and losers, if you look at Nifty gainers, HUL has been doing well, nearly flat to a positive start for HUL. Bharat Electronics, SBI Life, Bajaj Auto, L&T, all of them on the Nifty 50 gainers list as of now. However, on the losing end, let's take a quick look. Jio Financial Services seeing a decline of about 0.3%. Grasim with about 0.3%. IndiGo once again taking a knock of about 0.3%. Axis Bank, Trent, HDFC Life, some of the other losers on the Nifty 50. But yes, let's once again talk and address about the stock of the day, that is your IndiGo. Well, the stock is once again one of the top Nifty losers after yesterday's decline that we saw. Yesterday also we saw a decline of about 8%, and so far this month the stock has already declined by about 17 to 18% itself. Now, yesterday we did see a development that came in from IndiGo, where the airline regulator had responded to the DGCA, saying that they will be needing more time to reply to their show cause notice, and of course more time to understand what the root cause analysis of the problem has been. But yes, they've also notified that the network coverage has been fully restored following the last week's disruption. A 4-member panel, according to sources, is expected to summon IndiGo's CEO and CEO on Wednesday itself for the further examination of the incident. And the airline has added that they have already processed refunds, which is worth about 827 crore rupees. Hemen, the stock has already seen about 18% decline this month itself. What would you propose? Is it a time for buying, or should one remain on the sidelines for the time being, given that brokerages have also turned quite cautious on the counter?
Well, the safe advice would be to stay away, Lovisha, because like you said, we've fallen off a cliff. There's a downward gap on the weekly chart, which is obviously a bearish sign, not good. That will provide resistance, so stock will try to cover it up. If I were to look for a cushion or a respite, yesterday volume was significant, almost 1.5 crore shares. And normally when such huge volumes happen, obviously this is gross, not delivery market. So you have such huge volume traded, and if the bottom levels hold for a few trading sessions, chances are that the selling climax is over for the time being, and we are looking at a small recovery. As of now, the market is obviously weak, has gone down, and okay, that's a bearish gap, not a good sign. But up till now, IndiGo hasn't broken yesterday's low. I know we are clutching at straws, but so if we don't break yesterday's low today, tomorrow, day after, or ideally this week, we see some sort of respite. Between 4,900 and 4,700, there's a congestion area, significant support. So if I were to tell you to buy, I would keep yesterday's low as a stop loss, but it would be a rather sharp trade for a nimble-footed trader. One would wait for the hype to calm down. Let us see what is happening. But as of now, I think a small bounce is underway.
Strong bounce could be underway for Interglobe Aviation. But yes, on that note, Jefferies has also reduced its exposure to this particular counter in their new model portfolio rebalancing itself. So yes, something that we need to watch out. Right now, the stock is showing a little bit of a recovery. It's flat with a positive bias as of now. So yes, we'll be watching out whether or not there could be a pullback for this particular counter. All right, on that note, let's quickly move on to the next stock in focus, which is seeing a good pullback today. That is your Keynes Technologies, nearly 3.5% gains coming in for the particular counter. We did see a positive note that came in from brokerage, Macquarie, where they believe that the company will have to show some strong cash flow, organic growth and book of cash subsidies to restore certain investor confidence going ahead. Now, they have maintained its outperform call in the counter and have a price target of about 7,700 rupees per share, which implies about 100% upside from the current levels itself. But yes, coming to you, Hemen, I mean, the stock has already seen about 25 to 26% fall this month. And today, however, it's seeing a little bit of a pullback and a little bit of a recovery after the significant fall that the counter has seen. What would you suggest investors to do at this point of time?
As of now, it's a hold, at least from a slightly shorter term point of view, or maybe even a medium term point of view. Lovisha, stock 7,700 odd to 3,800 in a matter of 3 months flat, and we are still in the first 10 days of December. But interesting thing to note is that we have not closed below 3,800 on the weekly chart as far as gains is concerned. Last week closed below that was on the weekend at 7 June 24. So this 3,800 level is extremely significant, and it's been 1.5 years since we closed below that. So that support is playing its part. That is why we have seen some respite coming in. And looking at the situation is deeply oversold. Once again, not fair to compare, but it's almost like what happened to IndiGo yesterday. Huge volume, once again, more than 1 crore shares. Uh, Levels are holding. If 3,800 cracks, I think it would be bad. But if it, I mean, we've fallen off sharply. So oversold situation, very strong medium-term supports. I believe a small recovery is around the corner as far as gains is concerned. So as of now, hold. I believe some respite is on the way.
Okay, all right. Some respite could be on the way for Gains Technology, all right. That is something that we need to watch out for, right? Let's take a quick look at some of the viewer queries that is dropping on our live feed. The first query coming in from Naveen. He's asking what is the view on Bharat Electronics and if there is any fresh entry levels which can be advised at the current price point. Hemen, how does Bharat Electronics look for you? I mean, it was consolidating at a range of about 410 to 415, but right now it's broken below that 400 range itself.
It's formed a rounding top, Lavisha, which is technically a bearish formation. So without getting too technical, it has broken 400. Like you mentioned, it was a lower band of its trading range, 400 to 430. So very obvious apparent weakness. So assuming an investor wants to buy the stock, bigger picture is fine, but we've had a phenomenal run up. I believe one should not buy immediately. The important level I would look for is 360. One can start nibbling at around 360 because, like I said, not in the daily, even the weekly picture is has taken a hit. So I'd wait, and I wouldn't buy everything. I'd sort of spread my purchases, but 360 is the level I'd keep an eye on.
Okay, 360 is the level that you need to watch out for as a support level for Bharat Electronics. All right, let's move on to our next viewer query. We have Naveen who's been asking the view on Coforge on how this particular counter looks like. I mean, for you, Coforge, how does it look like? I mean, in the past 1 month, the stock has seen a good run up. And if you look at from September lows also, the stock is seeing a jump of about 22%.
Very interesting looking chart, Lavisha. It's not a triple top, but it's come close to its all-time highs, third time in the last 9-10 months. So a lot of relative strength coming in. But I think we need a close above. We've not historically closed above 1994 on the weekly chart ever, and this is the third attempt we are trying to do that. So if we close above 1994, I believe we should be looking at least 2100, if not more. So setup is promising. We haven't yet broken out, and if we are at historic resistance levels, a small period of consolidation cannot be ruled out. So it gathers the strength, so to speak, recoups, and then makes an attempt at 1994. So as of now, things look good, but only about 1994. But like I said, relative strength looks better than the rest of the market.
Okay, relative strength looks better than the rest of the market for Coforge then. Let's move on and talk about next viewer query. We have Amit Kumar who's been asking the view on CDSL for a fresh entry. Hemen, any thoughts on the counter? Today the stock is seeing a decline of about 1.5%, and in the past 1 month itself, the stock has been an underperformer.
1450, 1400, 1300, three support levels where one can look to buy. Uh, Long term is fine, but a little bit of advice for the investor when some of these stocks, I'm being slightly general, if they move 8 to 10 times, expect them to correct for at least a couple of years. Now, CDSL has done phenomenally well. This is adjusted for a one-for-one bonus. The rates I'm telling you, from 100, the stock goes to almost 2000 for the last 5 years. So everything is hunky dory. It's all good, but it's tired. You cannot run two marathons in a row. So it's entered a consolidation phase on the greater degree. So give it some time. The levels I've mentioned. So once again, the view is positive from a longer term point of view only. Levels to keep in mind. Once again, spread your purchases because the correction is not in a mood to end in a jiffy.
Okay, all right. Correction is not in a mood to end. That is something that we need to watch out for. All right, let's move on and address another viewer query. We have Satya, who's been asking the view on Suzlon Energy on how this particular counter looks like. I mean, yesterday we did see an interesting brokerage note that came in for the counter, and they have set a price target of about 71 rupees. But the stock has been consolidating around that 51 to 55 odd levels. What's your view on the counter?
Frankly speaking, Lovisha 46 looks like coming first. The logic for that is lower tops, lower bottoms below the 55-day exponential moving average. MACD, RSI, stochastic, mechanical indicators have given crossover sales. We are closing below 52, which is a decent, if not a good support. And once again, if the stock moves up from what 7 rupees to 86 rupees, forget the stock for a couple of years, and that's what is happening. If you look at the next 2 years, I think we are heading towards three figures. But as of now, like I said, clear pressure 46. It would be a pleasant surprise if 46 doesn't come, the vision.
Okay, all right. 46 is something that we need to watch out for. So that's a support level for Suzlon Energy. All right, in the near term, pressure is expected to continue for the counter. But with that, let's quickly move on to our next viewer query. We have NP Gandhi, who's been asking the view on Ola Electric for the long-term horizon. Of course, the stock has been a rank underperformer, Hemen, and in the past 1 month also, the stock has seen a decline of about 25%. Recently, it hit a all-time low as well. What's your view on the counter?
I don't have uh, too many good things to talk about because since listing, Lavisha, if you look at the charts, okay, that was the stratosphere, okay, different time frame from a high of 157 in August of last year. We've generally been under pressure, and we have a habit. Stock has a habit of posting all-time lows on a regular basis. Currently, it's the same scenario. So, event-driven stock, there are a lot of announcements happening time to time, and most of them, as we have seen, are not exactly positive. So, all-time lows, lower top, lower bottoms, stay away. I really don't think there's anything happening on the horizon. Oversold, yes, but being oversold does not mean there's a revival until we see follow up on the price action. I think one would need to review this at a later. Currently, short term, medium term, long term, limited data, but whatever time frame I look at, Ola doesn't sit well, Lavisha.
Okay, all right. Well, it doesn't sit well for the time being. And right now, the stock is also seeing a decline of about 2% itself. All right, let's move on and talk about another viewer query. We have Satya, who's been asking the view on the long-term chart for GMDC and NMDC and the levels to add and the targets for 12 to 15 months time horizon. Of course, GMDC also we have seen quite a bit of a sharp downtick. In the past 1 month, the stock has already seen a fall of about 20% itself, given that Nuvama had already given out a reduced call on the counter, saying that too much optimism has been priced in into this particular mining stock. But yes, Hemen, how does both of these counters look like? I mean, in the past 1 month, both of them, NMDC has also seen a decline of about 2%. However, it's consolidating at those levels, and GMDC has seen a sharper fall of about 20%.
I'll start with the easier one, Lavisha. I'll start with NMDC. I would say, I wouldn't say unequivocally bullish, but I am quite positive on the stock. We remain in a long term uptrend. Long term meaning time frame would be 2 years or more, not less. We have been in an uptrend for the last 5 years, and I believe it should continue for the next 2, 3 years. Yes, near term, I think we've gone nowhere, and it's been very range bound, very insipid, hardly any movement. But yes, long term you remains positive. Levels to watch 70 on the downside, followed by 60. Upside resistance comes in at 79 and 84. So slow moving stock doesn't do much. Long term view quite positive. On the other hand, GMDC always remains in the news, rare earths, and what say you? Currently, I believe we formed an intermediate peak and we are seeing pressure coming in. We are close to congestion areas at 450, which should provide a respite. The bigger picture is fine, but currently I believe it's run its course and we'll have to wait for this correction of a greater degree to play out. So it may sound repetitive, but yeah, going to take time. Levels to watch 450.
Okay, 450 is the level for GMDC, and some correction could be on the horizon itself for the counter. Right, let's move on to our next viewer query. We have Amma, who has been asking the view on IDBI Bank and whether or not she can add for a long-term horizon. IDBI Bank, of course, the stock has been consolidating at those levels, but still so far this year the stock has seen a good uptrend, 20% uptick. Hemen, what's your view for IDBI Bank?
We seem to be on the edge of a medium term correction. Three times over the last 4 months, or maybe last 10 months, IDBI has made an attempt at 106, has failed every time. So, one thing is very obviously apparent. Till it doesn't give a weekly or a monthly close above 106, nothing is going to happen. On the other hand, now it's falling under its own weight, so to speak. Since the breakout hasn't happened, it's gone the other way. Levels to watch were, frankly speaking, 94, 84. So I'd see clear weakness coming in short to medium term. Uh, One would look at buying at 84 and 70, two levels to keep an eye on. So longer term point of view, the script doesn't look bad. But like I said, three attempts at 106, give it some time.
Okay, all right. That's the view for IDBI Bank. Let's move on to another viewer query. We have Phoenix, who's been asking the view on Chambal Fertilizers for the short term and how to consider this particular stock going ahead itself. Hemen, the stock did hit a 52-week low, recently, and of course today also the stock is seeing a decline of about 2%. Can we see further fall ahead for this particular counter?
I'd be surprised if we don't see a further fall, Lavisha. 390 is on the horizon. Once again, I don't see why it won't come. 52-week low, I believe it will continue short term, medium term, long term, daily, weekly, monthly, whatever time frame you look at, things are not looking too good. It's a sell on all counts. So I don't want to get too bearish because it's come up from 740 to 410. It's come up significantly. But even now, like I said, 390 is the level to keep an eye on. Not looking very positive.
Okay, not looking very positive as of now. Right, with that, let's quickly move on to a next viewer query. We have Zamir, who's been asking the view on GAIL and how this particular counter looks like for the short term itself. But yes, GAIL, of course, it has seen a sharp fall in the recent days, nearly 10% downtick. What would your view be? I mean, we did see a smaller than expected increase in the pipeline tariff. But yes, and that's the result why the stock has been trailing itself. And today also the stock has been down by a percent. Hemen, what's your view on GAIL?
164, 150 looks
Okay.
like a distribution has happened, and we are seeing a downward breakdown from this distribution. So, yes, to your point of view, Gale is going back to 200 plus and maybe even more. Near term, like I said, 164 cracks in terms of closing. Uh, we are heading towards 149.
Okay, all right. 149 could be the support level for GAIL. And of course, 200 is something that you're watching out for. All right, let's move on to our next viewer query. We have Shweta Naidu who's asking on the view on JBM Auto. She's been holding with a loss and she's asking what should be done at this particular price point. Should she average or exit? Any thoughts on this particular counter, JBM Auto? Hemen?
I don't see any technical reasons to average at this rate. I'd say exit or a sell on bounce.
Okay, all right. So It's an exit for this particular counter. Now let's address another stock, that is your L&T. Well, the company did in a move has been trying to consolidate its realty business, and the board has approved the transfer of its realty business to L&T Realty Properties itself, which is a wholly owned subsidiary of the company through a slump sale. Hemen, now all of their realty operations will be consolidated under a single brand. So how do you view this move, and how does the stock look like on a technical level?
Move seems interesting. If you look at it technically, uh, we are in a long-term uptrend, and just last month we posted a fresh all-time high. I believe further highs are around the corner. Extreme near-term corrective weakness, crossover sells. So I mean the whole market is that way. So if I were to take a longer-term view, I think 4,500 uh, should be on the horizon. Extreme near term, I'd say probably another 100 rupees on the downside. So it's very clear. Short term weakness, the market is that way. Longer term, very clearly positive.
Okay, all right. All right, just one last question before we let you go. Hemen, I know we discussed a range of stocks with you, but anything that you are finding interesting in the markets, and what are your top picks would be?
Okay, I would say I like Birla Soft. The whole IT pack is providing respite to the market. So Birla Soft, Vsoft looks promising. We're currently at what, 423. One can buy at 420. Stop loss of 400, target of 460. I believe close above 440 should uh, give it levels, should see it go to levels significantly higher from here. So Birla Soft is a buy. I would have a sell call on CanBank, but it's a conditional sell call at 145, stop loss 152, and a target of 129. So a sell call, conditional sell call on a bounce at CanBank, and a buy on Bsoft, Lovisha.
Okay, all right. Birla Soft and Canara Bank, that is something that we need to watch out for. All right, Hemen, with that we have to let you go, but thank you so much for your time and, of course, answering our viewer queries.
Thank you for having me.
All right. Before I move on to our next guest of the show, let's take a quick check of the markets of how we are faring at this particular price point. Sensex has extended its sell-off. Now it's down by about 600 points. Nifty is also down by sharply with about 200 points downtick, slipped below that 25,800 levels itself. So yes, we started off with 25,900 being knocked off, and to now we have also slipped below that 25,800 levels itself. But yes, you can see India VIX has bumped up. It's 4% gains coming in for the India VIX itself, and the broader end of the markets that continues to reel under pressure. Bank Nifty seeing a sharper decline of about 300 points, 0.5% decline coming in from the Bank Nifty index itself. Midcap and small cap indices, both of them have been sharply underperforming the benchmark indices, seeing a fall of about 1% each from both ends of the markets. If you look at sectorally, of course, it's a broad-based sell-off once again for the markets. And if you look at Nifty IT index seeing a decline of about 1%, Nifty metals with a percent decline. On the other hand, if you look at Nifty realty, a percent decline coming in for there itself. So, of course, all in all, it's once again a very subdued set for the markets, so to say, as of now. But with that, let's quickly move on to our next guest of the show. We have Rakesh Vyas, CIO and Portfolio Manager at Quest Investment Managers, joining us. Rakesh, good morning. I mean, it's a muted start to December, so to say. I mean, Nifty is already down by 1% so far this month, and we have seen FI selling quite aggressively in just the past 7 to 8 days. So, what's your view, and what can revive the sentiment?
Yeah, hi, good morning, and thanks for having me here. Yeah, you are right. I mean, the start to December has been very muted, so to say. It's also largely because there has been a lot of expectations around culmination of this India-US tariff deal, which hasn't been coming through and getting postponed in a sense. Also, I think to certain extent there has been some profit booking as well in some of the mid and small cap in general. But incremental pressure that is coming is probably largely from the margin fund trade book that continues to remain very high at elevated levels, and therefore it is actually putting some pressure on mid and small cap. If you see the Nifty or Bank Nifty per se, it's been down, but it's not been down so much as compared to mid and small, where we have seen meaningful corrections already. However, my view is that as you move into calendar year 26, a lot of things that both the central government and RBI has been pushing through in terms of policy measures will start to bear fruit, and therefore we will start to see a reasonable uptick in the earning trajectory in calendar year 26, and that should actually revive some of these sentiments that is plaguing the markets right now. Also on FIs, it's been a consistent selling spree that we have seen from their side, especially in last 5 6 quarters. But it's also correlated with the very weak earnings that we have seen in the corporate side so far. And historically, FIs have always turned towards growth markets or have looked at markets where valuations are extremely palatable compared to what they were having in India maybe 6 quarters back. So as the earnings comes back, my view is that FIs will start to relook at India as a opportunity to invest. However, I think one has to be slightly patient, especially towards the end of this calendar year. And as you move into Jan Feb, we'll probably see green shoots coming through.
Okay, okay. Rakesh, but we've seen a large pressure which is coming from the broader end of the markets. Yesterday also from a technical point of view, we saw Nifty small cap slipping below that 200 DMA. But even from the earnings front, small caps have continued to disappoint. Back-to-back quarterly earnings growth decline that we have seen from the small caps front itself. So what can we expect going ahead? I mean, on one side, we're expecting that earnings growth would pick up, but broader markets that still continue to trail. So can we expect more pain going ahead from this part of the markets at least?
So if you look at small cap segment per se, I mean, you are right. I mean, over last 5 quarters or so, we have continuously been seeing declining earning trend there. But it's also related to the macro environment that existed during this time frame. If you just look at what both the RBI as well as government is trying to do is to spur consumption. Also, some of these small caps are directly or indirectly also related to export markets, and therefore this whole uncertainty around exports is also plaguing them. But I believe the translation of all of those policy measures from RBI and government will start to take shape. And as you move into fiscal year 27, we should expect a reasonable uptick in the earning trajectory for small caps. But also, generally, small caps are also impacted largely because of, as I said, the margin trading book that exists overall. And therefore, the pressure that is coming in from that side is actually accentuating this downfall.
Okay, okay. Rakesh, what about, I mean, from the banking sector, I mean, we have had the RBI's rate cut, but does that make you cautious on the entire banking space, given that while they indicated in the Q2 call that the margins could bottom out from here on, but with the rate cut, do you expect the margins could be under pressure for at least this financial year?
So you're right. I mean, till the commentary for second quarter, the expectation was that if there is no further rate cut in December, then we would have probably seen the bottoming out of net interest margin for banks in general. But given that we have seen 25 basis point already, we could expect one more quarter of some NIM compression. But I would still believe that part of it will get offset by the cost of funding benefit that is coming through repricing. And therefore, as compared to 100 basis point decline impacting the net interest margin, the 25 basis point will have a slightly lower impact. And also, key to note that the CRR cut is actually getting into place in parts since September onwards, and that's also going to help to certain extent the overall cost of fund. So I believe the bottoming out of NIM will probably happen during this quarter or at best the next quarter. But the credit growth that we are seeing is actually ramping up reasonably well. And as that happens, and as NIM then starts to bounce back again, FY27 will probably see meaningful earning growth for banks. And therefore, I'm not too cautious on banking space per se. I think banks smaller private banks as well, PSU banks and NBFC basket will probably start to deliver much better earnings in fiscal 27. And that will be a key driver for the overall market earning growth as well, because BFSI invariably is almost 30% of the market.
Okay, okay. What about IT stocks? I mean, how are you placed there? I mean, in the second quarter, there was an indication that, much of the downgrades could be already, in, and, we can see some recovery from here on. But the discretionary spending part, that still remains quite weak from the IT sector front. So, how are you seeing the upcoming quarters from this particular sector?
You are right. I mean, on IT, we have been slightly cautious for some time already, and it's largely to do with as you said, the caution around the discretionary spend and the impact of that on the company's growth and earnings thereof. But especially in terms of the valuations, I think we have already seen some bottoming out, as you rightly indicated. It's also because a lot of these companies make very strong free cash flows, very high distribution in terms of either dividends or buybacks, and therefore that provides some sort of floor in terms of valuation for these companies. The rupee depreciation is obviously helping these companies probably as you move into the next fiscal, because some of it will take some time to translate into margin and earning thereof. But I still believe that we haven't come to a phase where the overall revenue growth visibility improves materially for the sector in general. We'll have pocket of companies where either they've been doing very well and continues to do well, or the ones which have been under pressure for some time but are seeing incremental positiveness coming in. And therefore, on margin, we have been slightly becoming more positive on the IT space, but we still continue to remain slightly underweight on the name. But I think, especially given the rupee depreciation, the export-oriented markets probably sectors will probably do reasonably better.
Okay, okay, got it, got it. Rakesh, since we were talking about RBI rate cuts, I'll talk about another rate-sensitive sector, which is your real estate. I mean, how are you placed there?
Yeah.
We have seen a weak performance this year, but second quarter results were fairly okay on the back of the festive sales. But what's the way ahead for this particular sector?
I think one thing that we should acknowledge in real estate is that real estate is actually very micro market specific. So apart from 4 or 5 large pan India players in real estate, you obviously have to look at micro market and take bets thereof. So we have been reasonably positive on the real estate, which becomes a part of consumer discretionary portfolio for us broadly. But it's more related to specific micro markets, specific names. Obviously, the rate cut does help in boosting the sentiment, because we have seen a reasonable rate cut in last 12 months. It will probably translate into much better buying power. Also, the fact that the income tax cuts and GST rationalization, etc., is leaving some more disposable income in hand of consumer, and therefore they can look at incremental buying opportunities. But I would still believe that the kind of growth that we saw post COVID, which was led by pent up demand as well as consolidation in the market to larger organized players in general, has largely played out. So therefore, we will see more incremental growth from here on in terms of 15-20% kind of growth rates. And we probably are already in the middle of the residential real estate cycle. But specific companies where there are very reasonable launch opportunities that are coming in, or there the lot of projects that are under approval process, and there is a reasonable demand in those micro market, can surprise you positively. And those are the kind of names where we have taken some bet. Also, there have been certain changes in management or ownerships, etc., where we believe that the new owners are going to be far more proactive in terms of launches, sales, pre-sales numbers, and therefore we have exposure there as well. But as I said, I mean, you have to be very, very clear on what kind of micro market, what kind of players you want to invest in. Brush-based investing may not work here, to be honest.
Okay, okay, got it, got it. Rakesh, let's move on and talk about some of the capex theme stocks. I mean, on the industrial stocks, how are you placed? Because we have several brokerage notes that have pointed out that the state capex could moderate from here on, given that majority of the states would be entering into elections, and that could mark more subsidies instead of higher spending. So, does that make more more cautious on the capex themes going ahead?
So I think we'll have to look at capex in two different parts. One is the government related capex, and other is the private sector based capex, so to say. So if you see, I think from FY19 to FY24, both central and state government capex actually grew meaningfully across various sectors like road, rail, defense, port, airport, all of those, right? But since FY24, central government intensity on this capex has been coming down meaningfully compared to more than 25% CAGR that I highlighted in FY19-24 period on capex budgetary allocation. It's down to close to 8-9% now. And therefore, as you rightly said, even state governments who are looking at more welfare schemes, etc., are going to cut down on certain part of capex, and therefore one can be reasonably cautious on the space like road, rail, or more state government dominated sectors like irrigation, etc., to take an exposure. But the other thing that we have been reasonably positive on is around power and power T&D space, where we still continue to believe that there is long leeway for growth from here on as well, because as you try to put up more renewable capacities, more evacuation infrastructure is required. And I think this is not just an India theme, it's probably more of a global theme. And therefore, some of these plays continue to play well in terms of their growth opportunity that you look at next 2 to 3 years very specifically.
Okay, got it.
But I think
Rakesh,
one more point, sorry, I'm interjecting. One more point, I think one other aspect that I want to highlight is that if the consumption actually comes back,
yeah.
we will probably see much improvement in the industry utilization, and therefore, even on the manufacturing and the private capex side, we could start to see some green shoots coming in from FY27 itself, and that would be a key to watch and take exposure thereof.
Okay, got it. Rakesh, I'll scale back to your point of about FIIs, and of course, they might relook India after there is a reasonable earnings growth for the time being. But of course, for the time being, we still have that US trade deal overhang which continues. Even yesterday, we did see that US has announced some new tariffs that they might be considering on Indian rice. So, I mean, what's your take on this entire scenario? I mean, we do have less exposure in terms of US, but of course, in terms of sentiment, that's been a key drag, because from the past 1 year, it's still, I mean, it's going to be a year, but still there's no materialization of the trade deal.
And so I think one can continue to remain hopeful that the deal is around the corner, to be honest. I mean, there were a lot of issues that were discussed and debated over last 8 to 10 months, in my view. And slowly and steadily, a lot of them have got resolved, or at least there are indications that they are on path of resolution per se. For example, Russian imports, I think incrementally the crude import from Russia is already coming down. And also in certain spaces where I think Indian government has also been more positive around allowing import from US incrementally. So we are probably in maybe the final stages of this tariff deal per se. But I don't think just the tariff deal is actually impacting the FII flows, to be honest, because FII's outflow has been happening for last 6-7 quarters already, right? We have seen this tariff overhang in this calendar year specifically, right? So it's more to do with disappointing earnings that are coming through over last 2 years or so. But incrementally, we are improving our earning trajectory per se. And as I said, a lot of the measures that are being taken will actually start to take shape and into the calendar year 26. And therefore, as earning trajectory comes back, I am more hopeful around FIs looking at India again. But as I said, I still remain very hopeful that over next 45 days or so, we'll probably see culmination of a reasonable agreement around the US-India trade deal.
Okay. Rakesh, just one last question before I let you go. I mean, this year has been a year not just for gold, but also for silver. We did see silver also hitting record highs day after day as an asset class. But for the next year, how do you expect all of these precious metals to pan out? I mean, we do have the FOMC outcome, which would be due tomorrow, and rate cut is almost like a done deal.
Yeah, so in this environment, obviously, two things have happened actually. If you look at gold specifically, the rally actually started post-COVID is when a lot of central banks started to move away from dollar-denominated investments into physical gold and gold-related instruments per se. And then it's been continuing, and given the global uncertainties, given the interest rate environment that exists today, precious metal has been outperforming meaningfully. But I think that if you see now the kind of outperformance that we have already seen in this particular calendar year is very difficult to get replicated again. I would be turning slightly more cautious as I move into the next 12 months or so. I'm not saying that one can expect any major fall from here, but the earning expectation have to be more muted around next 12 to 18 months. Largely because once all of these trade issues get settled down, once we are at the bottom of this interest rate cycle per se, we could start to see some money being taken off from precious metals. But till that time, I think it continues to provide some opportunity. However, as I said, 12 months period, I will be becoming slightly more cautious.
Okay, all right. Got it. All right, with that, we have to let you go, Rakesh. But thank you so much for your time, and we hope that we connect with you soon.
Thank you so much for having me.
Thanks. All right, let's take a quick check of the markets. Of course, the sell-off continues, and you can see Sensex down by about nearly 700 points. Nifty is also down by about 220 points. It has slipped below the 25,750 levels itself. And only one Nifty gainer has been at this point of time. That is your Titan, showcasing a gain of about nearly 0.2%. Otherwise, majority of the Nifty 50 stocks have been one of the top losers. Topping the charts, that includes your Asian Paints with about 3% decline, Geo Financial 2.5% decline coming in from there itself, Shriram Finance seeing a decline of about 2%, Trent seeing a cut of about 2%, Hindalco, Tata Steel, some of the other top losers on the Nifty 50 as of now. India Wix has jumped by about 5% itself, and if you look at the broader end of the markets, both mid-caps and small-caps seeing a decline of about 1.5%. But yes, majority of the market breadth has turned quite weak as of now, given it's also the weekly expiry day, so we were expecting that some momentum is expected to remain subdued. But let's see how the second half pans out for the markets, whether it's going to be a deeper sell-off for the markets, or can we see a little bit of a trimming of the losses from the current levels. But yes, for now, we have come to an end of this edition of Opening Bell. Don't forget to tune in at 3 p.m. for closing, and we'll understand how the market is developed with our experts, and we'll be also discussing what the stocks grabbed the headline. So until then, signing off, but do stay tuned to moneycontrol.com for all the news updates and market insights.